Now in this lesson, we are going to discuss the cost management topic. As you remember in CMA, we have two parts, and under part 1, we have a cost management topic. And under this topic we have number 1, classification of costing, number 2, overhead allocation, number 3, process costing, number 4, job order costing, number 5, activity-based costing, number 6, life cycle costing, number 7, joint and byproducts costing, number 8, variable and absorption costing, number 9, service cost allocation, number 10, fixed and variable costing. And finally, we have some theoretical topics. And after getting to know all these topics, we will know what exactly is costing and its methods of approach. Now let us try to understand our first topic called classification of costs. Number 1. Classification of costing. Before going to understand this term, firstly let us know what is the cost. The value that has to be paid to get something. In business and accounting, the cost is the monetary value that a company has spent to produce something. And what is cost accounting? Cost accounting is the process of recording, classifying, analyzing, summarizing, and allocating costs associated with a process, and then developing various courses of action to control the costs. And what is financial accounting? It is the field of accounting concerned with the summary, analysis, and reporting of financial transactions about a business. And what is management accounting? In management accounting, the information available via financial and cost accounting has been presented better in order, which aids management and performance of control functions. And now you are pretty clear with what is cost. What is cost accounting? What is financial accounting? And what is management accounting? And now the next part under the cost accounting mainly is classification of cost. Costs are mainly classified into two types, that is, number 1, based on their behavior, number 2, based on their purpose. Number 1, based on their behavior. It can be again classified into three parts, that is, fixed costs. Fixed costs do not change within the relevant range of production, and it is independent of your production level. Fixed costs do not change within the relevant range of activity. As long as the activity level remains within the relevant range, the total amount of fixed costs do not change with a change in activity level, such as production volume. However, the cost per unit decreases as the activity level increases and increases as the activity level decreases. Variable costs. Variable cost costs those changes with the level of output. It varies as per the production. Variable costs are costs such as material and labor, among production costs or shipping out costs, among period costs, that are incurred only when the activity takes place. The per unit variable cost remains unchanged as the activity increases or decreases, while the total variable cost increases as the activity level increases and decreases as the activity level decreases. Mixed cost. Mixed costs, semi-variable costs, have both a fixed and variable component. It is a mixed component, that is, fixed and variable. Mixed costs have both a fixed and a variable component. An example of a mixed cost is a contract for electricity that includes a basic fixed fee that covers a certain number of kilowatts of usage per month, and usage over that allowance is billed at a specified amount per kilowatt used. The electricity plan has a fixed component and a variable component. A mixed cost could also be an allocation of overhead costs that contains both fixed and variable overheads. And under the classification of costs, the second category is based on their purpose. Production cost. Cost which is directly attributable to production is called production cost. Example: direct material, direct labor, manufacturing overhead. Period costs. Cost which is not directly attributable to production is called period or non-manufacturing cost. Example: administrative cost. Now there is a question. Let's say cost accounting cost in the accounting department. Is it a non-manufacturing cost or a manufacturing cost? It is a manufacturing cost because under cost accounting, cost direct labor, direct material, manufacturing overhead, and indirect labor and indirect material will come under manufacturing cost. And under non-manufacturing cost, that is, period costs are costs for activities other than the actual production of the product. Period costs are expensed as they are incurred. The number of period costs is almost unlimited because period costs include essentially everything other than the product costs, since all costs must be either product costs or period costs. The more commonly used examples of period costs include selling, administration, and accounting. But period costs are all the costs of any department that is not involved in production. Period costs can be variable, fixed, or mixed, but they are not included in the calculation of the cost of goods sold or the cost of goods manufactured, both of which are covered later. For financial reporting purposes, period costs are expensed to the income statement as they are incurred. The number of classifications of period expenses that a company uses on its income statement will depend on the company. Examples include general and administrative expenses, selling expenses, accounting, depreciation of administrative facilities, and so on. Costs are classified according to their purpose. The two main classifications of costs based on purpose are product or production costs and period costs. Product costs are called inventoriable costs. Product costs or inventoriable costs are costs for the production process, without which the product could not be made. Product costs are attached to each unit and are carried on the balance sheet as inventory during production, as work-in-process inventory, and when production is completed as finished goods inventory until the unit is sold. When a unit is sold the items, the cost is transferred from the balance sheet to the income statement, where it is classified as cost of goods sold, which is an expense. The main types of product costs are: number 1, direct materials, number 2, direct labor, and number 3, manufacturing overhead, both fixed and variable. These different product costs can be combined and given different names as outlined in the tables below. Number 1. Direct material. Direct materials are the raw materials that are directly used in producing the finished product. The costs included in the direct material cost are all of the costs associated with acquiring the raw material. The raw material itself, shipping in cost, and insurance while in transit, among others. Common examples of direct materials are plastic and components. Number 2. Direct labor. Direct labor costs are the costs of labor that can be directly traced to the production of a product. The cost of wages for production workers is a direct labor cost for a manufacturing company. Number 3. Manufacturing overhead. Manufacturing overhead costs are the company's costs related to the production process that are not direct material or direct labor, but are necessary costs of production. Examples are indirect labor, indirect materials, rework costs, electricity and other utilities, depreciation of plant equipment, and factory rent. Now let us discuss groupings of product costs. The 5 main types of product costs in the previous table can be further combined to create different cost classifications. The 3 classifications that candidates need to be aware of for the CMA exam are prime costs, manufacturing costs, and conversion costs. Number 1. Prime costs. Prime costs are the costs of direct material and direct labor. Direct material and direct labors are the direct inputs or the direct costs of manufacturing. Number 2. Manufacturing costs. Manufacturing costs include the prime costs and manufacturing overhead applied. These are all of the costs that need to be incurred to produce the product. Manufacturing costs do not include selling or administrative costs, which are period costs. Number 3. Conversion costs. Conversion costs include manufacturing overhead, both fixed and variable, and direct labor. Conversion costs are the costs required to convert the direct materials into the final product. Now let us discuss works cost, that is. Number 1. Opening work in progress. Number 2. Closing work in progress. And under the cost of production, we have opening finished goods and closing finished goods. Which means cost of production plus opening finished goods less closing finished goods is equal to cost of goods sold, COGS. Now let us look at the revenue statement. Sales. Cost of goods sold. Gross margin. Period costs, selling and administrative. Net margin. Now let us recap what we discussed so far. That is, we discussed what is costing, cost management, what is prime cost, period cost, what is meant by manufacturing cost, what is cost of goods sold, and all.